Hello and welcome to CNBC TV 18. I'm Shireen Bhan and you're watching our Newsmaker special. In focus today is auto component and wiring major Motherson Sumi, which has unveiled an ambitious 5-year plan, Vision 2025. Under that, the company sees consolidated revenue rising to $36 billion and has guided for a 40% return on capital employed as part of the guidance. It's also said it will ensure no country, customer or component will contribute to more than 10% of the overall revenue. Funds for growth will come from internal accruals, and Motherson Sumi may also look at issuing equity if necessary. Today, the group has announced an acquisition of 75% stake in a Turkish company, Plast Met, marking its entry into the country. This is the company's 25th acquisition, which increases its global footprint to 42 countries. Well, to talk about the road ahead, I'm joined by Vivek Chand Sehgal, chairman at the Motherson Group, as well as Group Vice Chairman Lakshwaman Sehgal. Gentlemen, appreciate you joining us here on the program. Mr. Sehgal, many thanks and a happy new year to both you as well as Vaman. But let me start by asking you about Vision 2025. On account of the disruption that COVID has caused, not just in India, but across the world, are you looking at scaling back in any fashion? Are you looking at redrawing those plans? Are you looking at less diversification at all, or are you staying the course?
No, we definitely think that this particular episode of COVID and what the aftermath has been will actually increase the opportunities for a company like ours. We are fearless. We go to any country, anywhere in the world. And we believe that our customers are going to ask us to do even more. So, if anything, we'll probably exceed. That's what I think.
Okay, you're saying that no scaling back. If anything, you'd probably exceed the targets that you've already set out for yourself. Vaman, Mr. Sehgal saying that the company is fearless. But given the change in dynamics at this point in time, especially the kind of disruption that is anticipated in the auto space, what are the new opportunities that you're going to be focusing on? I mean, if I were to take a look at all the kind of diversification that you're talking about, from aerospace, logistics, health, medical technologies, IT offerings, so clearly less is more is not the mantra that you're going with.
I think we've built a strong foundation over the years, and we're going to use that same successful mantra that we have built in the automotive in these new verticals as well. So it's not that we're going after some, big ocean, big blue ocean bets or something like that. We're going to focus on our competencies in engineering, manufacturing, assembly, etc. And all the new verticals that we have spoken about, we've been seeding them for the last 5 years. So we've been speaking to those customers. Again, we're only going to do acquisitions on the behest of the customers. So when they are, telling us to go after these opportunities, it gives us more confidence that we'll be able to make a mark in these other industries as well.
And just to add on to what Vaman is saying.
You spoke about acquisitions.
Sorry, to add on what Vaman is saying. The thing is, the opportunities are increasing on the increasing side because there is a lot of pain in the system. The automotive component suppliers and all that, there's a lot of pain there. So what we had envisaged earlier, last year, in fact, when we were coming out with a 5-year plan, the situation is a little bit more graver than what it seems to the eye. And you can see a lot of news is coming around on that particular thing. So we believe that the acquisition in the automotive sector is going to increase more, while our consistent approach on the new segments will remain. So that's why I felt that the number might be higher.
Okay, so when you say that the situation on the automotive side is perhaps going to get graver, but at the same time you see yourself being able to do more acquisitions there, how does that add up? If you're saying that the dynamics become even more challenging, then why are you looking at even more aggressively making acquisitions in that space?
Yeah, I think it's a fair question. The key thing is that we are already in those particular geographies where the pain is. So if you look at US, you look at South America, you look at Europe, Asia, we are not so much in Asia, but by and large in the western part of the world, we are there in a big way. And we have the infrastructure, the kind of team, everybody on the ground, and we have done a phenomenal job of how we have brought the companies out, as you will see soon. that gives us tremendous amount of confidence that we can do better and better. And I think the other people who are trying to emulate what we are get into trouble because they don't have the ground reality to support.
Okay. All right. So you're saying that that you will continue to do acquisitions in the auto space, even though the environment is getting more challenging. Let's talk about that challenging environment. And while a lot is being made about the shift to electric mobility, and I want to get your thoughts on that and how you intend to leverage on that opportunity going forward. But it's not just the shift to electric mobility. The talk around disruption for OEMs is going to be, how do you move from a hardware mindset to a software mindset? And somebody very nicely put it, it's the iPhoneization of the car that is challenging OEMs at this point in time. How do you gear yourself up for that kind of a change?
My first response to what you're saying and what challenges people think we have is that the change is not going to happen so fast as what you're imagining. We produce about 87, 88 million cars every year. The electrification of the cars at best is at about 2 million cars every year. So, if the gap is huge. Secondly, Shireen, we have about 1.3 billion cars on the road at the moment. How do you change all that? You have to go parallel. There are a lot of commonsensical questions which are there, and we don't see that change happening in 5 years. And if we do, for example, God forbid, if we are wrong, in 5 years the change happens to what you're saying, it still takes about 13 years for all cars to tilt in favor of electric, because 1.3 billion is going to take them about 15 years to make.
And that said, Shireen, we are also supplying to all the electric car manufacturers as well. So it's not that we've stayed away. We are actually engine agnostic. So regardless of whether there is an engine or a battery, Motherson components will still be very relevant.
No, you're right in pointing out that the overall EV market today is still about 4% in 2020 globally, and there is, of course, the big headroom as far as the regular combustor ICE engine is concerned. But still, since Vaman, you talked about the fact that you are supplying to EV makers as well, do you see yourself upping that portfolio significantly? What is the contribution on the EV portfolio today, and where do you believe that that's likely to be? I mean, if we talk about a BMW, they're talking about 13 fully electrified vehicles. Volkswagen is talking about putting about 3 million EVs on the road in 2025. What will your EV portfolio look like? Are you talking to the likes of Tesla? There's a lot of chatter around that here in India.
Look, we can't give you exact on which car makers, but to give you a general idea, we supply to all of them. So even those new models which are coming out, which are fully electric, Motherson is very much entrenched in them. But like my father said, the percentage of the EV as compared to the overall market is still very small. So in this 5-year period, we still envisage it to be a smallish kind of number. But after that, of course, as the car makers are coming up with bigger plans of producing more and more EV, if that is relevant at that time, Motherson will be fully entrenched in supplying to those. So if you look at the top 10 models of the EVs that are on the road today, Motherson supplies to, I think, 8 out of 10 of them.
And secondly, Shireen, the key point that you have to understand is we only acquire companies at the behest of the customer. So that the customer feels that there's a particular technology which might become irrelevant in about 4 to 5 years' time, I don't think he's going to pay or foot the bill for that. So in that sense, we are naturally hedged.
Okay, so of this $36 billion target that you've set out for yourself for 2025, which is a fairly ambitious target given where you currently are at about $10 billion, how much of this will be driven by inorganic growth?
That could be anywhere between 50 to 60% could be coming from inorganic. So I think it's best is to divide it into 3 parts. One is that we're already existing at about 10, so that we'll have an organic growth, go till about 18, 19 on the organic side. We would have some new acquisitions that the customer is going to ask us. And also then we have about 9 billion coming from the new verticals that we have put in. So if you put all of them together, it would be somewhere around 36 billion.
You know, on this 9 billion that you talked about, which is in the non-auto segments, logistics, IT, healthcare, aerospace, these are fairly small businesses for you. So are we likely to see you drive up this part of the new business part via acquisitions as well? Are you actively looking at that?
Yes, we are.
Absolutely. I think, again, in the last 5-year period, we've built the teams for these verticals. We chose them specifically because of our inherent strengths. We had a lot of conversation with our customers as well. From there is where we got that viewpoint that, yes, this is possible to make inroads. We've also looking at acquisitions as we speak into these verticals. And again, when something clicks, we'll let you know.
But on these new businesses, Vaman, since you said that you are looking actively at acquisitions and that is going to drive, drive you to that $9 billion target that you've set out for yourself, on the new business side, what is the kind of return on capital employed that you are targeting?
Well, the target for the group remains the same at 40%. I think if you look at, for example, if we pick up the aerospace sector, looking at keenly, you will see that there's a lot of pain in that sector at the moment. Of course, everyone knows the issues that sector has had, and of course, COVID has not helped it at all. So we do believe that it is possible to get those kind of ROCEs in that kind of an industry as well. And again, we're constantly in touch with the customer. They have come to our plants. They have given us small orders on the organic side. They're seeing how well Motherson can do. And similarly, in the other verticals as well, we believe that it's possible to do that. Of course, at day one, it may not be 40%. When you acquire a company, usually it can or cannot be at that number. But our goal is that in a 5 to 7 year period, we will transform that company to be delivering a 40% ROCE through, establishing more synergies and, of course, using our group strength as support.
Okay, I want to talk a little bit about the wiring harness business, the sort of bread and butter, so to speak, because 25% of the group's revenue comes in from there. What is the likely CAGR that you're working with over the next few years as far as that particular business is concerned?
So I think there is a clear plan which the company is already working on. Now, after Vriddhi, the split of Motherson Sumi will get into two parts. There will be a domestic wiring harnesses thing, and then we will have something which is outside India. That particular thing, actually, we have no limits. We can go wherever. So Kegel and all these things are wonderful things, but we like to keep that particular thing in mind, that our customer is going to ask us to go and support them in outside countries, in the wiring harness space as well. So as you see, we have done a great job with the acquisitions that we have done, PKC and as well MWSI. So if we get another big one tomorrow, who knows? The whole game might change.
Are you likely to get another big one tomorrow? Is that the plan?
I hope so. I mean, we would love to do that because we are very comfortable with it. And we know that product inside out. We have tremendous amount of capabilities in-house. Right from every aspect of that particular business, we are very, very competent. And we are getting global awards for doing the right thing in the wiring harness side as well. And that's the reason why we believe that there is tremendous amount of opportunity there.
Okay. Well, speaking of opportunities, and I want to understand how this fits in as far as your debt reduction plans are concerned, you've managed to bring your net debt down to about 7,512 crores in September from 9,083 crores in June. What are you looking at in terms of further debt reduction? What are you comfortable with? What will the move towards greater, perhaps bigger acquisitions also mean as far as debt is concerned?
Well, both of us not traveling is already a big debt around the lighter side. But,
Shireen, I think, you talked about our greenfields. In the last 5-year period, we set up 40 plus greenfields in the entire group. We had in the last couple of years, of course, bringing them all to starting up production and taking them through some of the largest, new programs that we have seen. We had some issues in the past as well due to some things that were out of our control. But now all of that has pretty much come into control. I think all those greenfield plants and the existing plants are doing phenomenally well. They will continue to throw up cash to reduce that debt. If we are not doing acquisitions, all that cash will be used to reduce debt so that we're ever ready whenever that acquisition is set for us to take additional debt for us to be able to do that. And we believe that the debt reduction will continue with the good performance of the companies and prepare us for a large size acquisition as well. That's been let's say, a silver lining of this COVID situation, that we've really worked hard as a team in the group. Everybody has looked at their units and has improved the profitability and made sure that we're on this plan of debt reduction. You've already seen the first result of that in the September quarter. And hopefully in the coming quarters as well, this trend will continue. As a group, for the size of the group that we are significantly under leveraged. We're under no such problems of taking on more debt. There's an additional headroom available. So that's what gives us the confidence that we can go after some large targets, because the operations are running well. Even with the second wave of COVID in Europe, thankfully, none of the plants have been shut down. All the customers are running the plants. Now there's some shortages in the semiconductors, etc., which again will have a short-term impact. But overall, all the plants are running. They are doing well. The customers are wanting to catch up on the lost volumes. So small aberrations may be really there, but the trend is absolutely positive. My father spoke about the personal mobility option. People want to have cars. People want to have a personal driving option because of the fears with COVID and having shared mobility. So all that's really, giving us a nice tailwind into the upcoming quarters. Something small here and there might be so, but overall, with the diversification, reduction in risk by going for the 3CX15, which we had in the past, you rightfully said, now we're moving to 3CX10, we're always able to bring growth back into the system, and that's helped us a lot during this time.
And I think we're also vindicated that, we're being in so that has a great vindication from Motherson, because everybody was thinking one or two countries are going to be the only sole production countries, and everywhere else you just need a distribution center. But we actually produce in 42 countries now. So I think that's a huge advantage that Motherson has.
Yes, with the latest acquisition that you've announced today, you've entered Turkey. So that's the 42nd country that you've got your footprint in. But just a couple of follow-up questions to what we heard there from Waman. Free cash flow, and you said that what is the expectation in being able to generate free cash flow annually, given what the plans currently are? Mr. Sehgal, you talked about the continued focus on debt reduction. What's the next target that you're working with as far as debt reduction is concerned? And finally, are you at this point in time looking at an equity issue at all?
Well, we even if we are looking for one, we can't do it because of the vritti, the separation of the domestic wiring harness with the international business. So I think whatever is going to happen probably will start happening around May, June, July, that kind of a time frame. So it fits in very well to what our overall thinking is. We try and explain to our investors and our shareholders that you have to look at 5 years, don't look at it quarter on quarter kind of thing. So we are very successful. I mean, you've seen the kind of return we've given. We've given return to our investors 32% year on year for the last 27 years. So I think my shareholders are very patient. They understand. And if we need the capital, abundance is available. There's hardly any difficulty there. But I think we will have to wait for the new formation of the new group.
That's right. And Shreen, we're only about a couple of 3 weeks away from the disclosure for the third quarter result. I think the third quarter and again the fourth quarter, now that the plants have stabilized, will give the shareholders a very good indication of how the company is performing. So, and we'll also showcase, once the reorganization is done, what we really want to do with some of these numbers and how we're going to generate the capital for these acquisitions. So all that will become very clear. Right now, the teams are really focusing on making sure that this, ramp up from the post-COVID times is smooth. I mean, of course, we're still in some parts of the world, the infections are continuing to increase. Hopefully, the vaccines are around to everybody as soon as possible. And we will see a great run-up once this tailwind is really catching on everywhere. And again, I think in third quarter and fourth quarter, once this reorganization is really done, all this will become extremely clear as we will give clear directions as to how we will generate those funds, and the performance of the companies is to be seen.
And the reorganization timeline on track, Vaman?
Yes, largely on track. I think from our side, there's been no stone unturned to try to push it as fast as possible. But of course, this involves also a lot of court hearings and those kind of things, which do take time, especially during COVID times. Things are slightly slower than normal, but largely we are on track. The voting, it will go out for the shareholder voting in the next month or so. And hopefully we'll get the approvals. And we are fairly confident that this is an excellent thing for all the shareholders. And we will keep on informing the shareholders as we get all the clearances. But we're on track as far as Motherson's timelines are concerned.
Okay, Mr. Sehgal, let me end then by asking you, as far as the diversification plan is concerned, as Vaman was pointing out, aerospace going through challenging times currently, logistics possibly also facing its own challenges. Will there be any specific areas that you would like to focus on, given the changed reality? And moreover, what do you believe will be the most significant challenges, even though you continue to be very bullish and optimistic about the road ahead, but what do you in the near term believe will be the most significant challenges that you're going to have to cope with?
So I think in the current world, we think that new strains and the inability of a vaccine to help that particular thing might be a challenge that could be anticipated. Other than that, I think the human spirit is very, very robust. They're very strong. People will fight back. We are seeing it all over the world. Wherever our plants are, we are seeing the spirit of human beings is unbelievable, and my salute to them for that. I believe that all the things that you're thinking about aerospace and logistics and all that, just watch the space for the next 3 months to 6 months, and you will see how people will come up with new ideas and things like that. And these are huge opportunities, untapped opportunities that are available. And you will see that the kind of 600 companies that Motherson has, in different aspects, in different fields that we have built up and made so strong, how they will all collaborate and come out with solutions for the kind of problems that the new world is going to have. So I think I'm a firm believer in the human spirit. I'm a firm believer in the Motherson spirit of survival and coming back strongly. So just would request you to be a little patient and just see what we are coming up with. It's very exciting. We every day we think about it, and we have a feeling that people probably won't understand, but when they see the numbers, then our numbers will do the talking.
Well, we look forward to seeing the numbers that you will release with your quarterly earnings. But for this evening, appreciate you joining us here with your take on how 2021 is shaping up, but more importantly, what the road ahead to 2025 looks like. And it will be driven in large measure by acquisitions, and in your words, by big acquisitions. Mr. Sehgal and Vaman, many thanks for joining us here on CNBC TV 18. Appreciate your time. We wish you the very best of luck. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment on CNBC TV 18.